Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Well, good morning, everybody. Welcome to Financial Issues. We're live this morning, October the 1st. Seth Udinsky in here with you today. Sam Case is on the audio board once again, and we've got Elijah Kelly and Grant Ace in the control room with you this morning. Hey, folks, Shana is feeling under the weather today, so we are manning the ship for today's show. So we're grateful for you. Thanks for joining us today. Shana will be back later this week. Pray for her healing, just a little bit under the weather this morning. But you're here with us, and we're excited to be here with you. So great to be here with you all. And we will hear a little bit from Shana later on in the show. We got some good content later on in the show today. We begin the final quarter of the calendar year, folks. Quarter 4 begins today, so there's going to be a lot to talk about with all of that, but it would be good for us, prudent for us to begin our show in the scriptures. So I'd like to read for you this morning Psalm 112, the entire passage here, not long, but really good and powerful for us. Psalm 112 says this: "Praise the Lord, blessed is the man who fears the Lord, who greatly delights in his commandments. His offspring will be mighty in the land. The generation of the upright will be blessed. Wealth and riches are in his house, and his righteousness endures forever. Light dawns in the darkness for the upright. He is gracious, merciful, and righteous. It is well with the man who deals generously and lends, who conducts his affairs with justice. For the righteous will never be moved. He will be remembered forever. He is not afraid of bad news. His heart is firm, trusting in the Lord. His heart is steady. He will not be afraid until he looks in triumph on his adversaries. He's distributed freely. He's given to the poor. His righteousness endures forever. His horn is exalted in honor. The wicked man sees it and is angry. He gnashes his teeth and melts away. The desire of the wicked will perish." Yes and amen to that. So, folks, the Lord has kind of impressed this passage on my heart as of late. It's a song of praise in which the psalmist basically shows us how the righteous man is to conduct his heart. And it's set as an example for us that we should be righteous. And I'm especially encouraged by verse 7, which says, "He is not afraid of bad news." He is not afraid of bad news. His heart is firm, trusting in the Lord. My prayer for each of us this week, especially as we begin a new fiscal year at the ministry, is that we are not afraid of bad news, specifically when it comes to our investing. Every area of our life we can apply this, but especially in our investing, where we need to tether ourselves not to what we hear and see around us, but to the strategy that we have put forth, to the wisdom that God has given us, and ultimately to the truth of God's word itself. And if we do that, I believe without question we will succeed. So that's my prayer for you all, that we would firm up our hearts, we'd trust in the Lord, not being wavered by bad news. Good to be here with you all this morning. I hope that was an encouragement for you. Hey, speaking of encouragement, we closed the book on our fiscal year yesterday, closed the book on our fiscal year campaign. We had a wonderful campaign and a great finish yesterday. The biggest day of the campaign yesterday, we ended up finishing totally over $121,000 raised by all of you for the Ministry of Financial Issues. I cannot begin to say from the bottom of my heart and on behalf of everyone at the ministry, thank you so much. Thank you for your generosity in helping us to continue on and press forward. We were also able to gain 21 new monthly soldiers, which is fantastic. That way supersedes the mark that we got last year. So we're praising the Lord for those continual gifts as well. 21 new monthly soldiers. Just a reminder, because of your faithfulness, folks, we're able to march forward with a couple goals as we begin a new fiscal year. Getting on additional outlets, that's already happened and is happening as we speak, to bring more believers into the FISM family. Also partnering with more ministries to fund the light. You'll find out some more about that in the coming weeks. Engaging more with companies to magnify the voice of FISM partners, and also giving our partners a more user-friendly and robust experience. That's coming with the website, which is going to be ready any day now. Really making FISM, that do-it-yourself strategy, even easier. So now I know many of you have maybe wondered this, and perhaps even more so because of the decision that we made, that we actually finished last week. We had to discontinue FISM News, but I'm so thrilled to tell you that by God's grace, we were able to reignite that beloved tradition of finishing in the black in the fiscal year. And so we were able to finish in the black this year because of all of you. Because of your generous support, we're set up for a great position for the fiscal year 2024 and 2025. So again, thank you all so much. It's because of the Lord's faithfulness through all of you that we're here right now on this show. So praise God for all of it. Can't thank you enough. And let me remind you also, if you donated to our ministry in the last month, you will receive a gift. Expect that planned giving PDF in your email inbox sometime in the near future. Shana is going to be talking a little bit about this document at our next conference call later this month. So you'll have it by that conference call. I don't have a specific date for you yet, but when I have that, I'll make sure to let you know. But a lot of good things to talk about here. Good news here at the ministry as we now come to the relatively chaotic news in the world around us. Let's start with the markets here. The markets open Monday a little bit negative as they look to end the third quarter on a high note. So yesterday we heard a speech from Jerome Powell, which Sam and I will get to that in just a moment here. Didn't make traders too happy, and so the markets fell slightly from there. But before the bell on Monday, the markets were able to turn course, and they surged above water slightly by yesterday's closing bell. So the Dow finished just above the flat line. The S&P 500 was the winner of the day at 0.2% in the positive, and the NASDAQ was up almost 0.2 percentage point. Right now, the pre-markets, everything is still, I believe it was in negative territory earlier this morning, and it's a little mixed right now. Not a lot of change. The Dow's down a little bit in the pre-markets. The S&P and the NASDAQ are hovering right around below and above the flat line, respectively. So that's what we're looking like here this morning. In the early morning. Hey, if you missed the show yesterday, I made an announcement. Sam Case is going to be joining our financial issues team here. We're so excited for it, and Sam's back with us. Welcome again, brother. It's great to have you on.
Hey there, Seth. How we doing?
We're doing great, man. We're excited.
Yeah, it's going to be a ton of fun. It's exciting to do this again.
It is. It is. And you know what? We're going to try to make the most of some rather chaotic news that we have today here, because in the financial space, folks, there is some chaos going on. So yesterday,
always
you heard...
is, Seth.
Yeah,
always is.
And you know what? It wouldn't be fun without that, Sam. So let's put it that way.
Keeps people tuning in, right?
That's right.
They want to know what the issues are for the financial issues.
Yep, that's exactly right. So, folks, yesterday you heard Sam and I discuss this looming dock worker strike set to begin this morning. Sure enough, it did. Sam, what have we got on this strike so far?
Oh, yeah, it's going to be a doozy, Seth, for sure. I'm going to recap a little bit of what we talked about yesterday, just to explain for people who missed it what's going on, because this has some real implications, both for the economy itself, inflation, what you're going to be buying at the store, and also a little bit for the election, too. We'll get to that later. But just to recap, nearly 50,000 dock workers at 14 ports on the eastern Gulf Coast, they are now striking as of midnight tonight. The International Longshoremen's Association is demanding higher wages and protections against automation. Almost 50%. Just keep this in mind to explain how huge this is. Almost 50% of total containerized goods entering the country. This also affects exports too, but entering the country is a big deal as well. Those are processed through these ports, so it's really just going to choke everything off. According to the Daily Wire here, just to give you another idea of what this is going to affect, bananas, coffee, cocoa, pharmaceuticals, clothing, furniture, vehicles, and even some Christmas products are all going to be choked off by this blockade. And then as far as exports, as I mentioned, that's going to include things like beef, poultry, eggs, cotton, things I'm sure Craig Haugaard is keeping his eye on. We might have to talk to him later in the week, because this is going to cause, like I said, some severe snags. It's estimated just one day of these strikes is going to cause about 6 days to recover from that chaos. In fact, the union president, a guy by the name of, actually, I don't have it here, but the union president broke down just the effect of what this is going to have on the economy. Let's take a play of that clip.
Streets from Maine to Texas, every single port will lock down. You know what's going to happen? I'll tell you. First week, be all over the news every night, boom, boom. Second week, guys who sell cars can't sell cars because the cars ain't coming in off the ships. They get laid off. Third week, malls start closing down. They can't get the goods from China. They can't sell clothes. They can't do this. Everything in the United States comes on a ship. They go out of business. Construction workers get laid off because the materials aren't coming in. The steel's not coming in. The lumber's not coming in. They lose their job. Who's gonna win here in the long run? You're better off sitting down and let's get a contract and let's move on with this world. And in today's world, I'll cripple you.
He'll cripple you.
Oh boy.
Yeah, a little bit of a threat there.
Yeah. Yeah, seriously. Boy, that's crazy stuff. Sam, thanks for bringing us up on that. Just folks to keep in mind here, some of the biggest ports in the country, Sam, is where the strike has happened. In Boston, New York, New Jersey, our own Philadelphia here close by, Wilmington, North Carolina, Baltimore, Norfolk, Charleston, Savannah, Jacksonville, Tampa, Miami, New Orleans, Mobile, and Houston. So if you think of the United States, Sam, that's basically the entire eastern seaboard plus that southeastern panhandle after Florida going into that western part of the country. Boy, folks, there's a lot to talk about with this. And Sam, we'll get to how this might impact the election coming up. But I want to remind you all, as we connect this to our strategy here, you got to remember that we're long-term, and remember that if you're going to hold on to your portfolio for 8 to 10 or 20 years or a lifetime, you're going to live through, as the great old hymn Amazing Grace once said, many dangers, toils, and snares. Your portfolio will live through those. It's good to keep an ear to the ground, but it's far better to buckle down and resolve to stick with our strategy. You'll see, as of this morning, I didn't see some commentary for this week. That commentary is coming out, though. Our strategy is really not changing, folks. We're going to stay strong in what we believe, the companies that we have. We're adding more things back to the buy list, so I hope you'll check those things. And as we see more of this come out, we'll get more of a sense of how this might impact the different investments that we have. But nothing to worry about here, folks. We're keeping you up to date on what you need to know. We'll be back right after this break. Stick with us.
We are indeed facing into the wind of this cultural holocaust to try to provide loving, compassionate, Christ-centered answers to these women. The greatest thing they need is the ability to make sound judgment decisions in their life, and that comes from the Lord Jesus Christ, a heart change that only He can bring. So we're evangelists to these women on behalf of the Financial Issues audience, and helping them to be able to move forward with wisdom in their lives when they come in, not just to save the life of their baby, but also to save the soul of the mom and the baby eventually as well. It's one thing to talk about it, but it's certainly another thing, and so encouraging to see the pro-life ministry, a Financial Issues Stewardship ministry, take a stand on this thing and do something so effective as we've done.
Yes, sir.
Go to financialissues.org/preborn to learn more about preborn.
How is Timothy Plan continuing to lead the fight as you guys now enter your fourth decade of leading this fight of biblically responsible investing?
We've been too silent for too long, and we can no longer be silent. You stand up, like Ronald Reagan said, we're only one generation away from losing all of our liberty. Yeah. It has to be fought for. I wish it didn't. And you can fight for it. You don't need guns and ammunition and that. You can fight for it, especially with your dollars, because it's always about the money. And when the money starts impacting people, they start paying attention. When we launched this, they said it couldn't be done, but here we are 30 years later. They said you couldn't get competitive returns, but here we are.
What a tremendous testament of God's grace.
Go to financialissues.org/Timothy Plans to learn more about Timothy Plan.
To Financial Issues, everybody. Lots to talk about this morning, of course. So a little bit of a different show format this morning. As I said, Shana's out this morning. So because of that, we want to get the ag report in a little bit early so that our NRB audience and our CSN audience, you all can catch the ag report today. I'm sure it's an important one from Craig Haugaard with everything that's going on with this strike here. So let's get right to that here. We've got Craig Haugaard with today's ag report, and then we'll come back in and make a little more sense of what's going on. Here is Craig Haugaard with today's ag report.
This is Craig Haugaard with your Financial Issues Ag Update for October 1st. The quarterly stocks report was released yesterday, and for corn, it was slightly friendly. September 1st, corn stocks were 1.76 billion bushels, 86 million below the average trade guess. Now, the rally in the market yesterday was probably more related to ongoing short covering than to this report. We also saw corn harvest continue to make good progress, with 21% of the crop now harvested. At the closing bell, December corn was 6 3/4 cents higher at 424 3/4. The report was somewhat of a non-event for soybeans. Stocks were 342 million bushels, just 9 million less than trade estimates. Soybeans are now 26% harvested, and that harvest pressure pulled prices lower during yesterday's session. November beans finished the day 8 3/4 cents lower at $10.57 per bushel. Wheat had a pretty neutral report as the U.S. all-wheat production estimate and the September 1 stocks number both came in slightly above trade guesses. Wheat rallied as we saw month-end positioning and concerns over dryness in the plains. At the closing bell, Minneapolis December wheat was 13.5 cents higher at $6.21 3/4. Kansas City rose by 7 cents to close at $5.83 3/4, and Chicago was 4 cents better at $5.84. Cotton futures are in a range of roughly $71.50 to $74.50, and we're going to need some fresh news to bust them out of that pattern. Yesterday's close had December futures up 89 points as they closed out the day at 73.61. Livestock futures were mixed. We had December live cattle 32.5 cents higher, $184.80 per hundredweight. November feeder cattle were 80 cents lower as they closed out the day at $244.90 per hundred, and December lean hog futures dropped by a dime, closing at $73.27.5 per hundredweight. Class 3 milk futures were kind of interesting. The charts were oversold after last week's drubbing, and we did rebound yesterday, but I'm not sure if it was a rally based on fundamentals or if it was pushed higher by bottom pickers. The closing bell had October futures up 19 points at 23.31. This has been Craig Haugaard with your Financial Issues Egg update. We'll be right back with more financial issues after this.
Well, there's Craig Haugaard for us, folks. We are going to try to get him on the program later on this week. I think he'll have some good insight on what's going on with the all the manufacturing stuff that we'll be seeing, as I'm sure we'll see news play out of that later on this week. Speaking of some other news here, Fed Chair Jerome Powell did give a speech yesterday afternoon. Sam, would you give us a recap of some of the things that our beloved Fed Chair said yesterday?
Oh, yes, indeed.
Yeah.
Old Fed Chair Powell. Let me see what we actually have here. It's a lot of stuff is what we actually expected, just continuing the idea of indicating future rate cuts. Let me see. Well, he indicated future rate cuts here during a speech to the National Association for Business Economics, but he said the recent half-point cut shouldn't necessarily be taken as a sign that future moves will be as aggressive, and here's a clip of him explaining why.
This is not a committee that feels like it's in a hurry to cut rates quickly. It's a committee that wants to be guided. Ultimately, we will be guided by the incoming data. And if the economy slows more than we expect, then we can cut faster. If it slows less than we expect, we can cut slower. And that's really what's going to decide it. But I think from a base case standpoint, we're looking at it as a process that will play out over some time, not something that we need to go fast on.
Okay, so you hear there, he's saying it's not going to be nearly as aggressive. Some people were thinking, we had a recent half-point cut, so maybe that's going to indicate future aggressive moves from the Fed. He just says that is not going to be the case. This isn't what the economy needs at this time. He does say that if the economy performs as expected, that would mean more rate cuts this year of a total of 50 basis points, so 2 quarter-point cuts. So let's take another look at that clip.
If you look at where we were 2 weeks ago, coming up on 3 weeks ago, I guess, when we wrote down our SEPs and made our decision, it was a situation where people were thinking, the bulk of the committee was at 75 or 100 basis points, and the votes were on 50, and that would mean 2 more cuts. It wouldn't mean more 50s. Now, of course, that'll depend on the data, but ultimately that's what the baseline is. If the economy performs as expected, and that would mean 2 more cuts this year, a total of 50 more.
Yeah, he always has that caveat. Depends on the data there. I do have one more clip just to give you another feel of what's going on here. He does also indicate that beyond the rate cuts, the whole mindset of the Fed right now is to adopt, in his words, a more neutral stance of balancing between, on one hand, handling inflation, on the other hand, handling the job market. So he talks about that as well.
For much of the past 3 years, inflation ran well above our goal, and the labor market was extremely tight. Appropriately, our focus was on bringing down inflation. Looking forward, if the economy evolves broadly as expected, policy will move over time toward a more neutral stance. But we are not on any preset course. The risks are two-sided, and we will continue to make our decisions meeting by meeting. As we consider additional policy adjustments, We will carefully assess incoming data, the evolving outlook, and the balance of risks.
All right. Well, that's basically the gist of what he said. So now, Seth, you're more the economic expert than I am. So what does it all mean?
Well, here's my thought with all this, Sam. You know, I think the Fed accomplished what it wanted to do for this year, which was kind of give an air of, we got this under control. But a lot of us think, well, I'm not so sure it's under control there, Mr. Powell. They cut rates in time for the election, Sam. I think that was really that big thing, is to give that air of, hey, look, there's improvements in the economy here. And the tough part is there's going to be a lot of people who are going to be hoodwinked into thinking that it is good. Now, this whole strike may throw a little bit of that off of the rails.
Yes, that's exactly. And I want to raise something about that, though, because I think I agree with you that this does give an air of, hey, the economy might be all right. It's going to have an immediate effect on interest rates. People are going to feel that immediately. But doesn't it also send a dual signal here that, hey, if we have to aggressively cut rates, I know he's saying that we're not being as aggressive with this, but honestly, half a basis point is pretty aggressive. It's at least more than we thought. Doesn't that say something about the job market, though?
It does. And that's exactly right. And, you know, I think all of this is kind of a sort of microcosm of the big picture that we've been saying for months now. Shana's been saying it too. The Fed is leading from behind and really doesn't have any control over what's going on here, and is perhaps giving the air of trying to. But we're going to have to see here, Sam. It's going to be interesting. I will say this, you know, Powell's not wrong when he says the Fed's not, that the Fed, foul, we're not talking about chicken here, that the Fed is not on any preset course. No one can tell the future, obviously, but I feel like it seems like the Fed can't even properly plan for it. So we're just going to have to see here with what is going on. Good thing our trust is not in the Fed. Amen.
Really, no one should have their trust in the Fed.
Exactly.
Not sure if the Fed trusts the Fed.
Yeah, absolutely. Well, Sam, I also saw an interesting headline that I wanted to get to here. Can you tell us about this recent mass cancellation that we saw from Netflix reasons why? I thought this was really interesting.
Yeah, it is interesting. And, you know, the way that people spin this headline, it's not as interesting as what people are suggesting it is, but I do think it says something about the way the culture is thinking. So what you're going to be seeing about this, if you have seen any stories about Netflix, this is a big deal. As Netflix subscriptions dropped at a rate of 2.8% in July. That's higher than any month they've seen since January. And keep in mind that Netflix is still an incredibly popular streaming platform. I believe that they do have, or tend to have, some of the lowest dropout rates out of any of them because they are the original one. They have a wide library of content. Don't 100% quote me on that, but I do think that this is a little bit abnormal for them. Now, the drop-off appears to be done by two things. You're going to see a lot of headlines that this comes around the same time that their co-founder, Reed Hastings, endorsed Kamala Harris. That is definitely contributing to this, but it also is kind of a dual effect here because it comes at the same time that Netflix canceled their $9.99 basic plan. They're now charging, I think it's like $16 for a regular subscription with no ads. So I think you're having two things here. One, people are angry that, hey, we're basically spending twice the money for what we already had. This comes also at the same time that other subscriptions are boosting their prices. They're cracking down on people sharing their passwords. So they're just making it more and more expensive when the whole point of this is, hey, it's cheaper than cable. It's looking like not so much. But I think that was then exasperated by his endorsement of Kamala Harris because that did seem to extend the bleed. So I think what you really have here is I don't like that the prices are going up for Netflix. People were on the fence about that, and then when he endorses Kamala Harris, that really just pushes some more undecided people. I'm not sure I want to cancel my subscription, but now you endorsed Harris, I'm definitely out now. So kind of a dual thing, but it does show that people are being proactive to multiple market forces.
Does. Yeah, absolutely. And I think this speaks a little bit to what we're trying to preach on the show every single day, which is we want companies to just do a good job. We don't want people, to endorse any political candidate for that matter. But certainly, I think with this, I think we can all see where there's smoke, there's fire here, folks. We did a deep dive on Netflix a couple months ago where we just looked at how it has failed numerously in these infractions on our screenings. Pornographic material and exploitation. It regularly produces shows that include explicit graphic nudity, like the jaw-dropping show Cuties, which is basically softcore child porn. Really, really bad stuff. It regularly normalizes the practice of sex trafficking, child abuse in its shows. Also, this goes without saying, the LGBTQ support. Many Wall Street giants have done this. Netflix is no surprise there. It supports the elevation of LGBTQ rights to supersede those of religious liberty. Also, like Disney Plus, has a Pride collection too. And then, of course, abortion legislation as well. Netflix did sign petitions to increase abortion access in pro-life states such as Texas. And then Netflix also offers to pay for the travel expenses of employees who are seeking out-of-state abortion procedures. So, folks, unless Netflix were to do a complete about-face, you would never even see them close to or even near our broad or buy list. But, you know, Sam, I think this says a lot about a couple different things when it comes to biblically responsible investing. Number one, this is a company that we see there's smoke, there's fire here, someone endorsing a liberal candidate, and then, oh, wait, look at all this. They're also a company that is supporting all of these godless agendas. But I think also we can see very clearly here that this is an issue of stewardship and where you're spending your money wisely. Might be a good thing for all of you out there, especially you young folks, to consider where you are giving your dollars, not just your investment dollars, but your patronage dollars. And I'm not just talking about from a purity standpoint, I'm talking about from a wisdom standpoint, living within your means. Do you need to spend $17 a month on a subscription service that is full of nonsense like this? The answer is no. It's a clear no. I'm not trying to say that it's morally wrong if you want to have a Netflix account. I think that's fine. But I would tell you, it'd be a good idea to take stock of your heart and do a really good look and see, you know what, how can I be spending my money in a way that is honoring to God? Boy, a lot of good stuff here. Sam, thank you for those headlines. That was awesome. Hey, folks, coming up next here, we got some great content here. You'll hear from Shana. We got more financial issues coming up. If you have to leave us, we hope you have a great rest of the day, and God willing, we'll see you again tomorrow. More financial issues coming up right after this.
Noah surrendered to the radical call to build an ark. Abraham had to leave his friends and family and the place where he lived to experience what God had for him. Both Abraham and Noah had a choice to be obedient. Will you abandon investments in your portfolio that support abortion, gambling, and pornography? Learn how you can invest biblically and abandon investments that dishonor God. Become a Financial Issues partner today. Go to financialissues.org/join to learn more.
Through the ministry of Preborn, the Financial Issues family has saved tens of thousands of lives of babies. What an amazing job that God has done through you, the Financial Issues family. Would you join us in saving the lives of babies? What an amazing reunion we will have in glory, meeting all the people that we have saved. Please go to preborn.org, that is preborn.org, or financialissues.org, and click on the Preborn banner.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. That made a lot of sense to me. I guard my heart, my mind. I watch my mouth, hoping to bring glory to God in everything I do and say. Well, why wouldn't I want to do the same with my money? I decided I wanted my portfolio to glorify God. I became a partner with Financial Issues, and it's been one of the best decisions I've made. I want to leave a legacy of godliness for those who are following in my footsteps. Invest your money in a God-honoring way. Go to financialissues.org.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan members.
For listening to this best of Financial Issues.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to this Labor Day episode of Financial Issues. We hope that if you do have the day off today, that you are enjoying your day off. Well, speaking of labor and the fruits of our labor, Social Security is a big topic that we talk about quite a bit here on the show, and we want to kind of continue that conversation today. If you have worked your whole life, you have paid into the Social Security system, your employer has also paid into that system. So, a lot of people get offended that Social Security is called an entitlement, but it is an entitlement. We are entitled to the benefits that we have paid in to the system for, and those who have not paid into the system, who have come here illegally and probably will never pay into the system, are not entitled to that benefit, I would say, with the exception of, maybe a stay-at-home spouse whose spouse paid into the system and or a minor whose parents died early and did pay into the system. So, lots of people hear us say kind of general information, general recommendation that you should really consider waiting until you're 70 to claim your Social Security benefits so that you can maximize your monthly payment. But there's always this temptation to say, well, I want to claim as soon as I can so that I can get back everything that I've paid into the system, because that's going to take a long time because we've paid in a lot. So especially when fear enters the picture, fear that you won't live long enough to get back all that you've paid in. I can say this, that even if you don't live long enough to get back everything that you've paid in, where you find yourself, if you're a believer, that is going to be the last thing that you're concerned about. You probably won't even think about it. So the bottom line is that most people tend to end up with a 30% higher monthly Social Security benefit if they wait from full retirement age to age 70 to claim. So I've got my friend Jason McDowell back, my colleague that works with me in private practice, to talk about more Social Security stuff. So Jason, can you kind of explain how that works, how you end up with a 30% higher benefit?
Absolutely. So it's really called delayed credits. And what we're looking at is a measurement of the full retirement age of the individual. So that's going to be dependent on when the individual is born, all the way to age 70. So how delayed credits work is each month you've waited without claiming from your full retirement age, you'll get a little bit of a delayed credit. So how we like to measure it is within a year. So from the full retirement age to the next year or the next 12 months from that point, you can get up to about 8% more in your monthly benefits just by waiting. So those are called delayed credits. And so when you get to that age 70, if you look on your statement, you'll see that that number is much higher for that monthly PIA if an individual can wait. So that's kind of essentially how the delayed credits work from that point. It's just basically waiting, and kind of goes along with wait as long as you can. Another thing to consider is if there was anything that you wanted to discuss, particularly with your situation with Social Security, I recommend just calling the national hotline. It's the Social Security National Hotline. It's the one number you call where you can actually do the online claiming or over the phone claiming versus going into your local spot. And if you want to ask for a supervisor, then a supervisor actually will have the ability to talk about your personal situation with Social Security, and you might have some claiming options with your particular situation. So supervisors have the ability to do that. The other people, when you call and talk to them, might be limited with that. So ask for a supervisor.
Good advice. And that the way that you get that 30% higher benefit, I'll just add, is because it's compounded, right? So you get the 8% delayed credit, and then you get an 8% on top of the original plus the 8%. So that's a little bit how compounding works. And so, Jason, talk through, what happens if you're kind of in that first scenario that I described, that, you fall into the temptation of, hey, I'm going to start this benefit as soon as I can. I don't want to wait to get the higher amount. But then, maybe you start doing the math and you start thinking about it and you change your mind. Talk about that.
Yeah, so there's an option. So if you claimed at 62 early and then you realize that, hey, I really needed more to my monthly benefit. Well, you have a period of time where you have to wait till your full retirement age. So at the time that the individual becomes a full retirement age and they've already claimed early, but they have what we call buyer's remorse, you have the ability from full retirement age to turn off or suspend benefits. From that point, then you can start accruing some delayed credits yearly to try to make up the amount that you basically lost by claiming early. It won't be the same as waiting, but you can at least add to it. So you can turn it off, and you can turn it back on at any point from your full retirement age to age 70, obviously being the max.
That's good. So, so there might be some people listening right now that started when they were 62, maybe they're a year or so into it, and now they didn't realize how much more they could increase their benefit by waiting, and now they have a way that they can maybe readdress that and go back. So, I'll just say this too. Social Security claiming can sort of be complicated in a way. For those of us for those who are fortunate enough to have done, marriage God's way, to have one spouse for life, Social Security claiming is kind of straightforward. But for those who have unfortunately maybe experienced the pain of divorce, or those who have lost a spouse, already lost a spouse, the situation becomes a little bit more complex. So, Jason, can you walk us through some of those scenarios?
Absolutely. So these are going to be basically when an individual has options or non-traditional claiming options. Do recommend talking with a supervisor with Social Security Administration if you don't have someone, an advisor, anyone you're working with that has some knowledge on the subject. But those are going to be called ex-spousal benefits or ex-spousal survivor benefits in those cases. Those two situations are going to be, hey, maybe a surviving spouse is of claiming age for Social Security, at least 62, and they had a spouse that died in the past but never got to the claiming age for Social Security. So there might be an option there where survivor benefits are going to be better for them because of the previous. Now, this is also in the case that they didn't remarry. So there's a whole nother situation where if you remarried after 60, there might be more claiming options in there. So the key word is claiming options, and you want to be aware of all of those. So having that knowledge of which one to go with that fits your particular situation is going to be important. I don't want to go too far in the weeds. Another one is where your ex-spouse is still alive and maybe you didn't remarry. It was just from a divorce. There's a situation where there might be some options there. If you were married for at least 10 years, then there will be an ex-spousal benefit that you as an individual can claim while possibly waiting to allow your individual credits accrue and have a higher benefit. So it'd be like going from a lower to a higher. These are all just claiming options. And of course, you want to dig into that a little bit more with the SSA and what will work for you.
Yeah. So like you mentioned, one of the best things that you could do maybe to call and ask for a supervisor, and they'll be able to tell you which all options that you have. So one last thing, talk about having other income. Like, what if you have a government pension? Speak to how that can impact the Social Security benefit.
It's a possible reduction to it, and it's not a harmful one in the sense that how the Social Security looks at it is a non-covered pension and a covered pension. So a simple definition of when you have a pension, can you claim Social Security? Well, the Social Security Administration or the laws have created a reduction to it when you do have a pension. If it's not covered, it means that you didn't pay into Social Security and that pension is supposed to be there. It means that those years before you started working with the employer, whether it's the state or the government or a private employer that's paying a pension, there will be what's called a windfall elimination provision. It's just a small reduction. It's a reduction, to your monthly benefits of Social Security because you have a pension. Then there's also the covered pensions where you did pay into Social Security while also working with an employer that has a pension. Well, those covered pensions won't reduce the Social Security benefit at all. So speaking to the ones that could possibly reduce your Social Security benefits because you have a pension, there might be a claiming time that might be best for you to wait so that you can actually have a benefit to go along with your pension. And that all really depends, of course, on your past 35 years of paying into Social Security, so the past earnings history that way. So those are some options of why to, get a hold of the supervisor if you can, or your financial professional that might have some knowledge on this.
Good stuff. Well, so glad that we could have you on today to go through some of those things. I hope we helped to encourage some people. Hopefully we didn't just confuse people more, but hey, we're giving you a solution if you fall into one of those complicated categories as, just call the Social Security office and get your options. And then, if you work with a financial professional, then you're in a really good place to start talking through some of those things. So Social Security can be, for those who are near getting it and will get it, is usually a crucial piece of the income puzzle for retirees. So take that seriously, work through some of those scenarios, and make sure that you get the most bang for your buck. Well, folks, we are going to take a break here at Financial Issues. We've got, maybe the Ag Report is coming in the next segment here, but stick with us. We're going to be back with more financial issues on this Labor Day. If you want to learn more about our ministry and how you can be a biblically responsible investor and a good steward with what you have, check us out at financialissues.org.
Gain valuable insights from partners sharing about financial issues.
We work so hard, all of us do, to get this money, and I knew nothing about how to use it appropriately, biblically. And the strategy is so simple. You guys are on the front line of the battle.
My wife and I have been partners with you for several years, and we have benefited greatly from your advice and your ministry.
I do nothing without following FISM's advice on stocks, and especially since it's coming from a spiritual foundation.
You are amazing. Nobody is doing what you are doing for the body of Christ.
I just wanted to call and thank you for the advice that you gave me a little over a year ago. It has panned out very well.
I never dreamed I'd be able to give money like this.
Become a partner today by simply going to financialissues.org/join. Click the green button to become a partner today.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Thanks for listening to this Best of Financial Issues.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. It is Rapid Fire Friday, and Terry has been waiting patiently. So let's get to Terry's call. Terry's calling from Nevada. Hi, Terry.
Hi, good morning, and thank you for being such a great service to the community. Thank you. What a blessing you are.
You're welcome.
Thank you, Terry.
My question is, I recently turned 65, I'm still full-time employed, and I have a 401k through my employer. I'm looking at moving some of that from their Fidelity account to the Timothy Fund to be able to work there. But my question is, a prior employer provided me with a pension option form, and this is money that I didn't pay anything into, so it would be 100% taxed if I take it out, or tax on 100% of it. And I'm looking at a number of, or in rounds, $58,000, and looking for godly wisdom on, should I try rolling this over into something with the Timothy Fund? Should I allow it to just default and they send me they have a 50% joint and survivor annuity, so they give me just under $400 a month till I die, and then money to my husband until he passes. I'm just looking for the best, way to invest God's money here.
Mm-hmm. So you said that if you took the monthly payout, it would be $400 a month?
Just under that, yes, ma'am.
And it has a survivor benefit?
Yes. Yeah, after I pass, then the benefit would be $197.03 until my husband passes. And I'm 65 and he's 63.
So he's younger.
Mm-hmm.
So the way that have you already settled in your mind that you want to do the lump sum, or are you trying to discern between the lump sum and the monthly figure?
I just want to have godly wisdom, and I didn't know if I took the lump sum, I could then just put that in the Timothy plan and do something with it.
Yeah.
and invest it and not worry about taxes every month, because I'm still working. I have a really good job. So even this $400 a month, they're going to tax me on.
Yeah, I mean, that would be the case whether you're working or in retirement. Would the payments start right away at your current age 65?
Yes, and that's the urgency on this. It's supposed to start October 1st.
Yeah. So there's a lot of options to weigh when you're looking at taking a lump sum versus a pension, a monthly payout. And when I just really quickly did the numbers, I looked at, if you take $400 a month and you annualize that, it's about a little over 8% of the lump sum. So typically we say anytime the monthly payment is more than 6%, you should really look strongly at maybe considering the monthly option, especially since it does have a survivor benefit. But what also weighs into that is, nobody knows how many days they have left. But if you think about your own health, the longevity in your family and things like that, the risk to taking the monthly payment is that, once both of you pass, there's nothing left. So if you both die early, then, the insurance company basically wins because they get the rest of the money that wasn't paid out to you. Whereas if you take the lump sum, it then becomes yours, and it can be an asset that generates income for you or that you can pass along. So, I mean, kind of in a nutshell, those are the main things to think about. I always would just say, consider it. Over 8% payout is pretty decent. But if you do decide to take the lump sum, I certainly would roll it over into an IRA. So wherever you do that, that's going to help you to defer the taxes even more. You just open an IRA wherever you want to have it, and then you're able to buy whichever investments you want. So if you do it at Timothy Plan, you're going to be limited to only the mutual funds because they're a mutual fund company. You can't get the ETFs in there or anything like that. If you open the account at a discount brokerage that allows you to buy the Timothy funds, you can still then get the Timothy funds and you can get the ETFs, which are, and follow along with our model.
Okay, great. Great. Thank you very much. You've been very helpful.
All right, Terry. Thanks for calling.
Thanks, Terry.
We appreciate your question. And Terry, you'll get one of those T-shirts.
Enjoy
Great.
it,
Thank
Terry.
you.
Rock it well.
Thank you.
Yep.
Thank you.
God bless.
Well,
All right. Let's finish up. I know we've got some questions from the website.
Let's do it, Shana. Jean is up first here, 54 years old, saying, "Hi, Shana. I was planning on retiring early in less than a year and was wondering," this brings back our conversation from earlier in the week, Shana, on retaring early. "I was wondering if you had any suggestions on how a person would handle my money tax-wise, like changing like changing $104,000 pre-tax money to a Roth. What money to draw out first? Should it be the IRA, the Roth, beneficial and investment accounts? Do I do it myself? I've been a partner a long time, over 10 years, and I've been listening since 2009. Plan on investing my 401k following the FISM strategy." That's awesome. What do you have for Jean, Shana?
Yeah, so I really can't speak as to how any financial advisor other than myself or Jason would handle distributions, but distribution planning is a very popular topic because, typically as people prepare for retirement, they end up with a lot of different accounts. They might have a Roth, they might have 401k, they might have just a regular investment account, so on and so forth. And you probably have multiple streams of income, some of which may be taxable, some which may not. And then you may also have, you also may be charitably inclined. So you may be thinking about, how am I going to give now? Do I want to do like a final tithe? Do I want to leave money? Do I want to deploy money into the kingdom when I go home to be with the Lord? So there's really a lot of topics to cover. I think that conventional financial planning wisdom is to leave the money in the IRA as long as you can so you can avoid paying taxes on it. However, I swim against the current on that one because I believe taxes are going to be higher in the future than what they are today. I'm more in favor of maximizing, especially if you can get money out in the 12% tax bracket, to do that now. I would be strategic in the way that I planned it. So, what we do when we're planning with clients is we look at all of their streams of income, we look at their assets, we look at their current tax bracket, and we try to come up with a strategic plan. So part of that is, when you have money in qualified plans like IRAs, when you turn 70 and a half, you can, Jean's only 54 right now, so you're a little ways off from this, but at 70 and a half, you can start getting money out of your IRA account without any taxes by giving the money. So you can start to use your IRA as kind of your giving fund and pay the best tax rate of all, which is 0, to get portions of that money out. I personally would leave the Roth alone as long as possible. So I would look at trying to put together a plan to keep your taxable income in the 12% bracket. I would even consider going, if you have large amounts in qualified pre-tax accounts, I would even consider going up into the 22% bracket to move some money out, either by way of a Roth conversion or just a regular investment account. It just depends on what all the assets, current assets that you have. And then, you also want to look at when to take Social Security, how to maximize that. That's another place where I tend to swim against the current on that as well. For most people, I think it's probably better to wait until 70 to start drawing on Social Security, especially if you have a spouse whose benefit is less than your Social Security benefit. So there's a lot of moving parts to it, managing tax bracket. We only have really this year and next year left where we have some relative certainty about what taxes are going to look like. Beyond that, at the end of 2025, the Tax Cuts and Jobs Act, President Trump's tax plan, expires, and it either has to be made permanent, continued, or changed. So the current election is going to factor a good bit into that. So we are getting sort of late in the year into the starting to get into the fourth quarter. So I really would talk to my tax person, find out, how much room do you have in the 12% bracket. I would consider at least converting that amount to a Roth or moving it into just a regular non-qualified account, and then, continuing discussions from there. So if you are considering hiring a person to help you with that, I would interview them. I would ask them to explain their philosophy on income distribution planning and see if it lines up with what you believe to be true. I think that's all we have time for today.
Might be all. Yep. Always comes.
Yeah, it does. Well, folks, we're at the end of the program today. We hope that you enjoyed it. We hope that you are encouraged, and we hope that you learned something. And we hope that you will share what you're learning with other people. That's the power of compounding, which is the theme for our year-end campaign, which you're going to start to hear lots more about next week. Well, we hope that you will come back next week because, Lord willing, we will be here to help remind you that time's getting short, the master's coming back, and there's going to be a test about how we handle the resources we were trusted to manage. And we want to be here to help you be found a good and faithful steward. We hope you have a wonderful day of worship on Sunday, and we'll see you back here next week for more financial issues.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us.